In your wallet or on your banking app, you see numbers and pieces of paper called dollars. They buy food, pay rent, and settle debts. But look closely. That paper isn't gold. It isn't backed by silver. So why does it have value? And why do people treat it so seriously? To answer that, we need to rewind the story of money a bit. Long before dollars, people used commodity money, things that had value by themselves. Gold, silver, salt, cattle, shells. These were useful or scarce, and people accepted them as payment. If you held a gold coin, you held something the world wanted. Later, government stepped in and started standardizing this idea. They minted coins with official stamps and said, "This piece of metal has this much value." Often, the coin's value was tied to the metal inside it, the weight of gold or silver. That made trade easier, but it also tied the money supply tightly to how much metal the country could dig up or import. Over time, economies grew faster than piles of gold did. More trade, more people, more businesses, and a constant question: do we really need every dollar to represent a fixed amount of metal in a vault? Governments discovered something powerful and dangerous. They could separate money from metal and still make it work. That's where fiat money comes in. Fiat money is currency created by a government and declared legal tender, but not backed by a physical commodity like gold or silver. The word fiat comes from Latin, meaning "let it be done," or by decree. In simple terms, fiat money has value because the government says it does, and because people accept that. Take the US dollar. A modern dollar is a fiat currency. It is issued by the US government and central bank, and you're required to accept it for taxes and debts. If you live in the US and owe taxes, you must pay in dollars, not in goats, not in gold bars. That legal requirement, plus everyone using dollars in everyday trade, gives them real power. So why does this paper, or this number on a screen, actually work? There are three big reasons: law, trust, and network. First, law. The government declares its currency legal tender. By law, it must be accepted to settle debts in that country. Courts, contracts, salaries, taxes. Everything is written and enforced in dollars. If you refuse to accept dollars, you step outside the normal legal system. Second, trust. People trust that tomorrow, next week, and next month, others will still accept dollars. They trust the central bank not to print so much that the currency collapses, and they trust the government not to suddenly change the rules overnight. That trust doesn't come from the paper itself. It comes from institutions and habits. Third, network. Everyone around you uses dollars: stores, employers, landlords, online platforms. The more people use the same unit, the more useful it becomes. If a whole country uses one currency, each person benefits from that shared system. Here's a simple way to think about it. Commodity money says, "This coin is valuable because of the gold inside." Fiat money says, "This note or number is valuable because everyone agrees to treat it as valuable." The first relies on physical metal. The second relies on a shared story, backed by law and institutions. Of course, this has pros and cons. On the positive side, fiat money is flexible. Governments and central banks can adjust the money supply, lower or raise interest rates, and respond to crises like recessions or bank runs. They don't have to wait to mine more gold to support more economic activity. On the negative side, fiat money can be abused. If a government prints too much or loses control of inflation, the value of the currency can drop fast. History has examples where uncontrolled fiat money led to very high inflation or even hyperinflation. That's why people worry and ask, can we trust this system? So when you look at a US dollar bill today, what exactly gives it value? It's not a gold promise printed on the note. Instead, it's a combination of the US government's declaration. This is legal tender and must be accepted for debts and taxes. The Federal Reserve's role. Managing supply. interest rates, and stability of the dollar over time. The global network. Many countries trade, save, and invest in dollars, making it a dominant world currency. That global use is important because oil, commodities, and international debts are often priced in dollars. Many foreign companies and governments need dollars regularly. That demand adds another layer of value beyond US borders. Does that mean fiat money is fake? Not exactly. It's very real in the sense that you can buy real goods, pay real bills, and settle real contracts with it. But it is different from money whose value comes directly from a commodity. Fiat money is value created and maintained by rules, beliefs, and institutions. Think about the dollar in your pocket like a ticket to participate in the US economy, to work, trade, save, invest, and pay taxes. As long as that system is running, the ticket is useful. If the system breaks or trust collapses, the ticket can lose value quickly. That's why some people still like holding assets outside pure fiat money. Things like real estate, stocks, gold, or even cryptocurrencies. They're not rejecting fiat completely. They're trying not to rely on just one story. So, what is fiat money? It's money with value because of the system behind it, not the material it's made from. And why do dollars have value today? Because millions of people, companies, and governments treat them as valuable every single day under laws and institutions that keep the story going. Next time you see a dollar bill or a balance on your phone, remember, it's not just paper or pixels. It's a tiny piece of a giant trust network that we all take part in, whether we notice it or not. If you enjoyed this simple explanation of fiat money and why dollars matter today, make sure you tap like and subscribe to the channel, because it helps the algorithm.